Accounting basics. Today I will teach you some of the basic concepts of accounting, like the what is accounting, what is financial accounting, what is transaction, what is cash and credit transaction. So first of all, what is accounting? Accounting is the language of business. Just like humans have language, computers have programming language, business has a language, and that language is accounting. And the purpose of any language is communication. So accounting is used for communicating information about any business. Now, what is financial accounting? Financial accounting is the process of preparing financial statements. In financial accounting, accountants prepare financial statements, and there are different financial statements like the balance sheet, income statement, the statement of retained earning, and the cash flow statement. Now, what are transactions? So, transaction is actually dealing between two persons. So, there must be two persons when there is a dealing, and there is an involvement of money or valuable thing like the car or smartphone or maybe any valuable thing. So, that is the transaction. So, it is the dealing between two persons. So, there must be two persons, and there is an involvement of money or any valuable thing. So, what is the budget? So, budget is a financial plan, and it is for a defined period, and normally the period is 1 year, and but it could be less than 1 year. It could be 1 month or maybe something more or less than that. Now, the concept of costing. So according to this concept, a person who is making or producing anything, actually the person producing or making is actually a producer. So the producer must actually must not only know the cost of making the product, but it also helped in determining the selling price. So the producer should know the cost of producing the product, and it also help to determine selling price, because sometimes actually the cost actually exceeds the selling price. So in that case, the producer may face loss. So costing help to determine the selling price. Now, the impact of IT on accounting. So there is a huge impact of IT on accounting. Before IT, there was a manual accounting. Accountants actually use the manual systems, like they use the paper, registers, pencil for recording the financial information. But nowadays accounting is entirely different, and it is done through accounting softwares on computers, on laptops, on PC, and even on some portable devices. And in future there may be impact of AI, artificial intelligence, on accounting, and that accounting will also different than this accounting. So next is the barter trading. Before the invention of money, there was no actually the anything which can be used to measure the value of any commodity or service. So there was a barter trading concept there. So in that concept, there was a trading of one commodity or service for another commodity or service. And if someone need to buy a product, they actually buy through exchange. They give one product for another product. But after the invention of money, there is a money measurement concept, and nowadays this is the common concept which is used, because the barter trading is no longer used, and it is not even possible to use barter trading normally, because there are so many products are available in the market and so many transactions, and the size of trading business is increasing, is expanding. Now, the cash transaction. There are two types of transaction, cash and the credit transaction. So in the cash transaction, the money value of item is paid at the same time when the item is exchanged. When we buy a product and we pay in cash at the time when we actually purchasing the product. So this is the cash transaction, and it is the common common type of transaction. But there is another type of transaction which is also common in this modern world, which is the cash transaction. In this type of, so the credit transaction, in this transaction, the payment is delayed to a future date. The payment is not at the time of exchange, but it is delayed to a future date. So this is the credit transaction. So this was today's video. If you have any question, you can ask in the comment, and if you need this slide, you can download from the link in the description box. Thanks for watching this video and subscribe for more accounting videos.